Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 11th of November. Starting up with Keras Minerals in the wake of its JV with Bizant. And here we've got the level to break here, really around the 21 pence level. That's a line of resistance from September. End of day, end of week, close above that. The shares could be heading up towards the top of the broadening triangle from June, as high as 28 or 29 pence, maybe over the following 4 to 6 weeks. But obviously, the trigger point hasn't been hit just yet. Positive, I suppose, is the way that that gap was closed there, the last gap down at the beginning of the month, and so we're above that level, or above 19 pence, and so if you are a fan of the shares, you might see enough there to give it a decent view in terms of the long side. On to Emerson, where we've had a strategic buyer and director dealings. So far, that's led to the shares actually just bouncing off the old October resistance, 6.25 pence. We're around there now, so it'll be interesting to see how the shares close, ideally above 6.25. So then we can then head back up to retesting the August peak at 7 pence, and then the notional target maybe over the following month or so up towards 8 or 9 pence. Only back below the floor of the gap, below 6 pence, really delaying the recovery scenario for Emerson at the moment. Stock which is doing well on a charting basis, and maybe hasn't really captured the imagination in terms of the punters, but sometimes that's not a bad thing. We've got Gulf Marine Services, and here we've broken that line of resistance from back in March. That was around the 6 pence level, above 6 pence on an end of day close basis. Then we could see the shares heading up towards that resistance line projection from back in February, up to 9 pence maybe over the next 1 to 2 months, only back below the 50-day line at 5.25 or so, really delaying the upside scenario, the recovery scenario there. Onto a stock which I haven't looked at for a little bit, Gtech. Here it looks as though we've got the run up to a golden cross between the 50 and 200-day moving averages, so that could come through in the next week or two. Obviously, the level to clear is 31 pence, recent resistance above that. We could see the shares heading towards the top of that rising trend channel from the latter part of last year, as high as 50 pence, maybe over the next 2 to 3 months, or maybe a bit sooner, if given the way that we have that golden cross set up for the shares. Stop loss back below 25 pence at the moment, back below those two moving averages. We've seen Bitcoin do well of late. So far, that hasn't really fed into the mode share price, but we do have a notional broadening triangle there from February, floor of the triangle around the 30 pence area, and we bounced off that reasonably well. Also, the dip towards 30 pence took the shares into the most oversold they've been since they came to market, which is maybe a point to note. Just need to clear or have an end of day close back above the old September low around 34 pence. If we can get that, we might get a little run up to the 40s or the low 40s over the following 2 to 4 weeks. So something to look out for there. Cinegen has bounced a bit of late. We had a gap higher today, which is impressive. Pretty impressive that we've held above that broken resistance line there. So the broken resistance line broken in the middle of last month. We tested that as new support, had a bear trap, a rebound from below the 50 and 200-day moving averages as well. So just a hint there with the gap higher today that above 180 we could head up and retest 220 plus, maybe over the course of the rest of November going into December. Finally got the big news from Saban Technology. We already had a decent spike for the stock back in September, but obviously the market being what it is, most of that was whittled away. But in the meantime, we bounced at or just below the 50-day line, currently rising, which is a positive. We've gapped up higher today, while there's no end-of-day close back below the initial November resistance of 27.25 pence. We could retest and should retest the September peak around 39 pence. Best case scenario target maybe over the next 1 to 2 months up to 50 pence, which is the top of that broadening triangle from back in January. So Saban looking rather more healthy than of late. Tlou is next. Announcement from the company today. And shares have gapped up. Another stock which has tested a broken resistance line as new support and the 50-day line. In fact, bounce above that, which is a positive. Gap through the 200-day line today. So above the 200-day line, 3p, we're looking for up to 4p at the top of that rising trend channel from back in June. Maybe you could hit that by the end of this month with a fair wind behind it. Otherwise, a stop loss back below 2.7 pence at the moment, the 50-day line. Moving on to one of the stocks of the moment, Velocis, which I think I've been covering quite diligently of late. The warning sign, let's say, that the shares could break higher was back in the middle of last month around the 6 pence level. To check whether I covered it then, but I think I did. Not that that's really that helpful in the sense that the shares peaked at 7.5 and then came back to the 6 pence notional entry level. We had a target up towards 8 pence on the break of that resistance line, which was obviously achieved yesterday with a gap. The current view is that while we're above yesterday's high, which was 9 pence, then we should at least hit 14 pence on the top of the broader rising trend channel from back in January. If you're looking for a tighter stop, maybe the top of the old gap there at 10.25 pence could do the trick for you. If you are a fan of the shares and looking for a greater target, that would be up towards 22 pence. To see whether that resistance line came from, that was back from the June peak. And so we got 14 and then 22 pence as possible targets there for Velocys. And they could be achievable given what or how good the news that the company delivered yesterday. It was quite a blockbuster type of announcement. All things green this week. So looking at Verditech, here we've got a situation where shares still trying to consolidate their recovery from back in July, where we headed back towards 2 pence. Nice sideways action at the moment, and above now the 200-day moving average at 3.8 pence, which is about the first time properly they've been above the 200-day line since back in January, so that is significant technically. If you're looking for the upside, I suppose initially up towards that line of resistance there at 6 pence from April. Otherwise, if we can get through that, then it would be towards 10, but let's go for 6 pence first while we're above recent support around 3.5 pence on Verditech. Zephyr, it's almost every day that we have an RNS from the company, normally a decent one, a positive one. Here we're looking at a situation where, if I can get the chart going, we've got a rising trend channel which has been in place since the beginning of the year, and after an extended consolidation since July, it looks like the shares are finally ready to head higher. Obviously the resistance there around 7.25, 7.4 pence, something like that. So a weekly close above 7.25, probably enough now to get the shares up towards an implied target as high as 11 pence at the top of what looks like a broadening, a sort of small, narrowish channel, but a broadening triangle heading up to 11 pence, maybe by the end of next month. Upside valid while we hold above 6 pence, so above 6 looking for 11 over the near term at Zephyr. That's it from me today. More updates tomorrow.